obviously the podcast. This is the revenue channel. I am the host, Gabriel, the realtor Montoya, and again, this podcast is really, here to obviously really, really look at some leaders out there, some entrepreneurs, some boss ladies, and just really talk to them and really hear their stories. It's very important, especially in today's society, that we hear how people are winning. How
Mhm.
they're been able to overcome, obstacles and challenges. And, again, I just would have been just so impressed with your story, just you as an individual, you as a mother. Again, just and obviously I want to obviously share that with the world. So we're going to definitely just have a conversation today and just really get to know who you are. And then obviously I hope that you can kind of share kind of your input on kind of where the market's at. Maybe give us I know that you're not a psychic or anything like that, but definitely give us a little bit of maybe some insight of kind of where you see the market going, just obviously with your years of experience. So tell me your story. Who are you? Tell me a little bit about yourself.
Yeah, absolutely. So, about myself, I'm a single mom of two wonderful young men. Matt, who is a M1 in medical school at Georgetown University, and my youngest, Zach, who is a computer scientist, and he actually works for Fannie Mae, not the candy store, but the Fannie Mae and Freddie Mac. Those two big entities that we are very well known in the mortgage business. Um, and I a little bit about me. I got into mortgages actually my second year of law school, and that was 30 years ago because my oldest I had him my second year of law school, so they parallel each other as far as age goes. And I still finished up my law degree. However, I decided to stay in the mortgage business because it really parallels being an attorney. You have to present your case to the judge, and here you have to present your case to the underwriter. And so I really think that sets me apart from like a typical loan officer because I have to be very analytical. I'm super detailed when I meet with my clients. And I really want to make sure that when I turn in a file to my underwriter, it's a really good file. So it doesn't leave any benefit of the doubt to let her come up with their own conclusion other than, getting it approved for me because I've presented all the facts. So,
Great.
I fell into this business because my, I was working for a real estate law firm before I went to law school, and they had I spoke with a few agents because I dealt with them in and out every single day. And they were recommending, because I am bilingual, I'm Spanish, they recommended that I go into the mortgage business because they needed Spanish speaking loan officers, and there weren't a whole lot back then. So that's a little bit about my background. I
And
actually,
are you born and raised in Chicago?
yeah, well, in a suburb of Chicago,
Okay.
but I
Okay,
now
great.
live in Chicago. I was born and raised in a suburb, no, in northwest suburb here from Chicago, and yeah, so my family, my parents immigrated from Mexico, and love their story because I learned my strong work ethics from them. My father was a migrant worker, so he went to the different parts of the country, like Florida during orange season, California during, whatever season it was, Iowa when it was tomato season. And he was a cotton picker as well. So,
Wow.
um, yeah. So, he gave me the courage to always think about when there's an opportunity to jump towards that opportunity because he made a decision when he was just barely 20 years old and decided to, come back to the Chicago area with one of his friends that happened to go visit him when he was living in Texas, one of those migrant farms. And he took the chance. And my dad's a very soft spoken man. So he's not like a
Wow.
risk taker, So
Yeah, yeah.
I really think about him every time I try to make a decision and think about how he took that risk. And I'm here today because he met my mom and, had her family. So,
Perfect.
yeah.
Awesome. Well, I definitely appreciate you definitely sharing, obviously, some back history in regards to your story, where you come from, and that's awesome. Again, like I know that you and I have kind of sat down and we've kind of talked about really how you fell into this mortgage industry.
Mhm.
Let's talk about really kind of it's obviously it's easy to talk about wins. It's easy
Mhm.
to talk about when we've when we've accomplished this or we've accomplished that, or we've won this award. But let's talk about some obstacles or challenges that over the last 30 years that you've been in this industry that you've faced with. Maybe times that you said, you know what, I can't do this anymore, or I want to quit, or maybe it's just some times where again, like you had to make some tough decisions,
Mhm.
in order to continue to win.
Yeah. So back in, I believe it was in 97, I actually went through a divorce unexpectedly. And at that moment in time, all I knew were two things. One, that I had to take care of myself, and two, I had two boys to raise, and their father wasn't anywhere to be found at that moment in time. So I decided in that moment in time, I was working for a mortgage company, and um, they weren't very supportive, and especially being a single mom and a male dominated industry. I just said, you know what? I threw my hands up and said, you know what? I'm not going to take their attitude as my attitude. And I decided to open up my own mortgage company.
Wow, awesome.
Yeah. So I just really, I believe in God, and I said, if this is what's meant to be, then He's going to make it happen in record time. And it did. Like, I got my
Awesome.
license in record time. I got FHA approved and VA approved, right away. To even have the assets, I was able to put that all together, given the circumstances. And it was a successful business for 10 years. And I really enjoyed it. I loved it because I was helping people reach their dreams of home ownership. And in the Latino community, family is everything.
Absolutely.
Home is like everything. That's like the heart, right, of a family. And so that's why it's so important to me. And that's why I love what I do, because I get to be able to help generations. Because when I worked at a previous job as a national director of community development, I learned a lot about CRA, and I learned a lot of statistics. And one of them showed a statistic that is, I never knew innately, I knew, but I didn't have anything to back it up. But now I know statistically, when you have a stable home for a child, that really makes a whole big
Absolutely.
difference for them. And that means a lot to me. So
Awesome.
the mortgage tsunami happened in 2008, and that was
Hmm.
another big challenge. So,
How did you get through that?
I had to make a decision. I love the business, but the decision, just like everyone else, there were a lot of companies folding left and right, like not just mortgage companies, but banks, right? And I had to make a decision again to survive. I mean, if you hear my
Yeah,
stories, a lot of it's about being a
absolutely.
survivor. And I decided that I was going to close it down because I needed more stability. And that's when I decided to go into the banking side of things for
Okay.
mortgages. So I went, because we didn't know what was going to happen regulation wise.
Hmm.
And I decided to join Chase Bank, and I worked with them. I went in just as a loan officer, and
Okay.
people would often ask why. And I said, because I wanted to know how they worked at ground level, right? But I climbed the corporate ladder really fast because of my background, because of, my law degree,
Hmm.
my leadership skills, and got promoted pretty quickly throughout the whole my tenure there. And but yeah, so that's how I got through that. And but entrepreneurship is in my blood, so
Great.
yeah. Hmm.
Perfect. So when you talk about banking, like what were, when you say the banking side, can you
Hmm.
kind of share what that is for
Yeah.
maybe the audience who doesn't know what the banking side looks like?
Sure. So that's retail, right? So when you see
Okay.
a Chase Bank brick and mortar, that's
Hmm.
retail,
Okay.
and that's what I mean by the banking side.
Okay.
So
Perfect.
Bank of America,
Great.
Chase, and then
Okay.
I ended up, my last position was with Key Bank, which is based
Okay.
out of Cleveland, Ohio. Hmm.
Okay. Great. And then you transition from banking back into the mortgage side, correct?
Yeah, onto just
Okay.
the like mortgage, like going directly to the consumer rather than
Okay.
having, like at a bank, you'll have
Yeah.
other things, like commercial
Exactly.
deposits, things like that. So uh,
Perfect.
when I started my company, I was a mortgage broker. And with that, you have a lot of different lenders you can deal with. And then, the banking side is they're the ones that the banks are the ones lending the money.
Hmm.
And then you have where I'm at now, and I'm a correspondent lender, where we lend our own money, but that's
Great.
all we do is mortgages. Hmm.
Okay, perfect.
Yeah.
So again, like just to kind of recap, obviously, like you said, your back was against the wall, and it's
Hmm.
it's crazy that once our back's against the wall, we have to figure things out. You know
Hmm.
what I mean? Like, we have no choice, and your back was against the wall. You had to make some tough decisions. And
Hmm.
like you said, you then said, you know what, I'm going to, put my trust in God, and I'm
Hmm.
going to, go after this, I'm going to open my own, mortgage company. And that's what you did. And that worked out. And then, like you said, things kind of went a different direction. Obviously the bust happened. You went into the banking side.
Hmm.
And so where we are today, obviously, through COVID, how did you manage to get through COVID? As a mortgage lender, what did that look like? What did that look like in your industry through COVID? The world shutting down, we're in quarantine. Like, what is now going through your mind?
Yeah. So I was actually working as a national director of community development for Key Bank at that moment
Okay.
in time. So I was not out there originating. I wish I would have been originating,
Yeah.
because that's when a lot of these loan officers made a ton of money. Because if you remember, our economy was going down the toilet or the drain, and all of a sudden our political leaders had to make some major decisions, and so they started tightening the belt. And one of the ways to keep the economy stimulated is by,
Yeah.
dropping rates. And so they dropped the Federal Reserve funds so low to almost zero. So the banks were getting able to borrow this money, but that also had it ended up having an impact on mortgage rates too. So you saw them, in the whole 30 years I've been in the business, I've never seen rates that low. That's the
And
first
can
time.
you talk about the pros and cons of that happening?
Yeah, yeah. So the pro was obviously you had consumers, and there's a couple of things. There's actually a couple answers I can give you for this. The pros was that the consumers were able to take advantage of it. On my side, where I was on the community lending side, the con was when you have a higher risk loan. A loan is a risk. A mortgage is a risk, right? A
Exactly.
loan, any
Correct.
kind of loan is a risk.
Hmm.
You had uh, the leaders of the banks and lenders that were tightening up their belt. So the ones that got hurt the most were the ones that probably, the affordable lending side of it. Those that, lower, low to income borrower that, like at that time I had 100% financing at the bank, and they just started really tightening up the guidelines. So it prevented entry into that type of mortgage product. So that was the con. That's what I saw as a con. The other thing, obviously, driving up that consumer demand for housing. I mean, you saw these values of homes just skyrocket. I just remember the first time when that was starting to happen. I remember hearing somebody say, "Oh my gosh, they just bid over like 60,000." I'm like, "What? Like, how are they going to do?" They don't care. They want the house. They said they'll bring the money in. I'm like, wow. Then you saw people just, waiving home inspections. And to this day now, when I see it flip flop where people are getting home inspections and they're walking away from a deal because they don't want to deal with the issues that the inspection brought up, I can only imagine the people that decided to forego those. Right. So,
Right.
yeah. So there was, so those are that's, it's a con for the buyer, but a pro for the homeowner who ended up, gaining a lot of money during those times. Hmm.
Perfect. So your current role, what does your current environment look like? And can
Yeah.
you tell us a little bit about that?
Yeah. So now I came back. I decided back in, what are we in 2023 now? So in 2021,
Okay.
I was not happy in my position.
Okay.
Here
Yeah.
I am. I was in charge of the national side of lending for community lending for this beautiful bank, and but it wasn't fulfilling to me.
Right.
And I know sometimes people get to a point in their life and they're like, okay, I can coast it now. I'm just not one of those people. I have to keep busy and I have to feel like I'm making an impact in
Yeah.
people's lives. So I always, I had to dig deep. And I think a lot of people, I want to claim that I'm probably one of the first ones that did that, what do they call it? The silent,
Uh
quitting.
huh. Yeah, yeah.
because
The
I
quiet quitting.
quiet quit, right? Because for me, I was just like, I can't live my life this way. I'm
Mhm.
wasting away. I
Yeah,
have to keep busy. I want to, stay sharp, and I'm good at what I do. I'm really, really good at what I do because I own what I do, right? I look at my
right.
position very seriously, and this is my profession. So if I were to be a pro, basketball player or,
Yeah,
volleyball player, like I would have to make sure I practice and and that's how I see myself. Like I'm professional, and I wanted,
right.
I view it that way. So I just decided one day, I'm like, I think it's time. I had enough money, my savings,
Mhm,
and it was
mhm.
just everything was timing. And so I remember talking to both my sons about it. My youngest is like, "Oh, great, mom, because I know how much you love doing that." My oldest is like, "Well, what happens if
Yeah,
hey, there's no such thing as failure. Like
right,
I'm great."
absolutely.
No, I was not going to accept that. So, but I've got their support either way. They just, always
Right.
want to make sure mom's okay.
Yeah.
And, but yeah, so I decided, you know what, I'm going to jump in. And when I first got into this business years and years ago, I remember meeting with a lot of different mortgage companies. They thought they were interviewing me, but I was interviewing them because I
Absolutely.
knew at that, at any time, I think
Yeah.
people should look at their jobs that way. And so I decided to do the same thing. And I had some friends that had just joined an organization that was fairly new. It's only like 3 or 4 years old. And so I thought, why not? I tried it there, and I worked there for about a year. And great, great organization, but someone that's very seasoned like me,
Mhm.
we need to have the options, and we have to have the processes in place. I'm very, when I owned my own organization, I had processes and systems and, in place. And so that helps me then to be a very effective loan officer. So that way I can set the proper expectations for all parties, including my realtor partners and, my clients. And that's
Yeah,
important to me. That's important to me because that, that is what sets up the expectations, right? But that's what
absolutely.
sets up your successes after that, for referrals from not only your partners, right, your realtors. Our goal is always to make sure we're giving you and your clients the best service, so your clients will send you business after that. That's my
Absolutely.
goal.
Perfect. Awesome. Well, let's talk about, again, let's talk about, really networking. Let's talk about, how you connect, how you build relationships.
Mhm.
How important is that to your business? How important is relationship building? How important is connecting? How important is that to who you are today? Where again, like you see other mortgage companies or other individuals maybe not as busy. How do you continue just to say, you know what, gosh, like I can't stop, and I guess what drives you, what's your why, what
Yeah.
again, like what inspires you, what motivates you to
Mhm.
just to just fulfill these dreams of yours.
Yeah, I love what I do. I really do. And I'm just very fortunate that I can say that. Like, sometimes that compassion for what I do, and passion, when I have one last thing to do and I'm like, oh man, I just want to go home. I'm tired.
Yeah,
That I remind myself how much I love this, and somebody's counting on me to make sure I get it done. So I do it. Um,
perfect.
yeah, I just think that I go back to my parents. My parents, my dad worked 7 days a week. My mom worked, they worked split shifts, and they never complained ever. They never complained. They knew they were doing what they had to do to support
Awesome.
the family. And so, my kids are both grown up. I'm an empty nester, and I'm by myself. I have my dog, me and my dog. And
Yeah,
now I get to do what I want to do for me. And so, relationships are a must in this business. Sometimes especially with Latino community, because sometimes, I see my counterparts that might be dealing with just, you know, non-Spanish speaking clients, and they, there's no, like, it's in and out, like there's no relationships. Applications are done over the
mhm,
computer, or online. Whereas with us, we have to have that conversation, we have to listen. I'm very intent. I listen intently. Like somebody asks me a question, I'll answer it. And then when I ask them the question, I don't care if there's like 5 minutes of silence, I'm going to wait until they answer. Right. So, and that's what it's about. It's about communication, and a lot of it's about caring. I don't do this for the money. I do this because I care. And I hope that, that transcends into, every time I call somebody or when I call them to let them know that they're clear to close and,
Right.
they're just amazed. Or when I tell them that they're pre-approved and, you see the husband and wife hugging,
Mhm.
because they couldn't believe that they could really get approved. And sometimes I think a lot of it has to do with education and educating your client and empowering them. That's important to me. Education in general, I don't care if it's,
Yeah.
college or just reading, you don't have
Mhm.
to have a degree, but just taking enough time, to educate yourself. That's why I truly believe in helping others learn
Perfect.
more
Love it.
about what it means with home ownership and what that means to them. So I go back to what I said earlier, growing up in a Latino family, the house, I remember visiting my grandparents and we'd always, couldn't wait to go to their house and, play outside. And um, that's what, this business means to me. It's like I'm helping them build their dreams and, you know,
Right.
that's it.
Perfect.
Yeah.
I love it. So one of the things you talked about is obviously, like you said, a predominantly male industry.
Mm-hmm.
Predominantly male industry, and then obviously you're a minority.
Mm-hmm.
How have you? If there was someone new, let's say someone, just like yourself, a Latina, a woman, um, you know, what words of advice would you give her um, entering into the space?
Yeah.
Uh, how, what, to just encourage her.
Mm-hmm. Well, number one, I'm glad that you're asking this question because it's really important. You don't hear about what you hear about different professions, but you never hear about, oh, I want to be a loan officer when I grow
Hmm.
up, right?
Yeah.
I think we're we can make a very good living in this business, and I don't think we share that enough with others. So in my heart right now is I have a passion and compassion to bring younger
Great.
individuals to learn about this profession,
Yeah.
because again we get to impact people's lives, right? And help them meet their milestone of home ownership. And I don't think we have enough new individuals coming into the business. I would say what's really important is, number one, stay coachable. I would
Great.
advise them to find somebody like myself who cares, right? Not just about, oh,
Yeah.
we're going to close a deal or it's a transaction. No, it's about, the people that are sitting across from you that you're making those, you're helping them make decisions by giving them the proper information. And so to really seek out mentorship, that was important to me for my own career development when I was in the mortgage banking side at the banks. I found a
Good.
mentor, and I
Perfect.
told her I
Love
was
it.
going to adopt her whether she wanted to mentor, you know, but that
Yeah.
helped me. It helped me to have the skills that I have today because I watched her in the banks, that's a male dominated
Yeah.
industry. And so that would be my biggest piece of advice is
Great.
find someone, and unfortunately there aren't a lot of females in this business. It's still very male dominated. I mean, I go through some of these magazines online. I'm like, wow, look at
Hmm.
all these articles. They're all
Yeah.
males. They're all
Yeah.
males. I'm like, where are the females, right?
Yeah.
Um, and then I
Perfect.
would say, take the time to read your guidelines, take the time to understand how you put a file together. And what I mean
Great.
is, the file is actually a puzzle, right? So
Yeah.
you have to be able to answer the questions that the underwriter is going to ask you. So learn how to think like an underwriter while you're putting this, file together. So when you go to present it or when it's presented to her on your behalf, it's really nice and clean, and it puts the
Perfect.
full picture. And what I mean by that is sometimes you'll have somebody that's, I always tell people like what to expect when I'm getting all their information up front. And I always say, we're going to talk about your work history and we're always going to look at 2 years. I always say the rule of two for everything in what I need from them. And for them, for work history is, 2 years. I'm going to ask you where you've worked less. Doesn't mean you have to have the same job for 2 years, but we're going to look at 24 months. So I'm going to ask you when you started there and when you left there. And I do that intentionally because I want them to start thinking, because
Yeah.
I don't remember when I left my last job, right?
Right.
So,
Right. Yeah.
so yeah, so I'm just trying to like get them to start thinking. And then, if there's any job gaps, of 6 months or more, we have to address that. So half the time I see loan officers wait until everything comes in and then they see the job gap. I'm so detailed.
Address it now.
Yeah, and I address it. Okay, so I see that you have, after we go through the 24 months, I'm like, what happened between this month and, this March date from here to this, June date? Oh, I was laid off. Oh, okay. So, tell me a little bit more about that. So I try to be very thorough. And so that's one of the things, a skill that I think every loan officer should intentionally learn, because that's going to help them to avoid those pitfalls. Because sometimes that can be dramatic where here you had a client that thought they were approved because you told them they were pre-approved, but we didn't address it. And all of a sudden it gets to underwriting and it's a major issue. So yeah, I would
Great.
say that.
Perfect. Awesome. Well, thank you for definitely sharing that. The next thing I'm going to really kind of just talk about is really there's obviously, I think the government right now is, the government is kind of just looking for ways to kind of help, consumers out there when it comes to real estate, and we've obviously seen some changes in the FHA. Can you
Mm,
talk about what that change is and how that
yeah.
affects the consumer, please?
Yeah. No, I was so excited to read that. I think I read it hot off the presses and told some of my agents.
Yeah.
I was in Berwyn and I was talking to one of my top agents and I'm like, oh my goodness, look at, and I read it right to her. And then she got like a text like 10 minutes later that gave her the same news. And she's like, see, this is why I use you, because I got the info right, right
That's
away.
awesome. The 411.
Yeah, the 411. So what happened, and this is not like, I think the last time this happened was when Obama was in
Okay.
office. So the what's called with FHA, there's an upfront mortgage insurance premium that you pay that's added to the mortgage after the down payment amount, and then there's a monthly one. And mortgage insurance premium is basically you're insuring against yourself that you're not going to default. But if you do, which we hope never happens, but if you do, and the bank has to take the home away, it's one of their ways to recoup some of these costs. So everybody that does buy FHA has to pay into it, regardless of whether you put 20% down or 3.5% down.
Right.
So the monthly MIP is mortgage insurance premium is 0.85%. Okay, so with this change, it was dropped by 30 basis points, which is now it's down to 0.55. And that's a matter of a couple $100. So on the average, they're saying a buyer may save anywhere between $800 to $1,200 now, which also now helps them qualify for more home as
Perfect.
well. So that's an exciting thing that I see happening. And the other change that's recently happened too, which is a little controversial right now, the what's called LLPAs, loan level price adjustments on the conventional side.
Okay.
When you have, so what that means is it's kind of like you picture a matrix that says, okay, if your loan to value, meaning your down payment is, let's say 20%, versus like 3% or 5%, and your credit score is 750 versus like a 620, the pricing for that interest rate is going to be better for the person that fits the 80% or the 20% down and the higher credit score versus the one that has the 620 and has less money down. That person's going to probably have a worse rate just because the greater the risk. However, and I'm not quite sure when this change is happening. I want to say maybe late March, but those loan level price adjustments are now changing over towards the to benefit the affordable lender now.
Okay, great. Borrower.
Yeah, the borrower.
Okay.
So, however, with that, I guess it's going to hit those that have good credit and, maybe a larger down payment a little bit more. It's going to hit their pocket. In other words, the rates may be a little bit higher. So I say this is controversial. It hasn't gone into effect yet, but it's on its way. So I'm kind of, I think we're all as loan officers waiting to see how that's going to hit our pricing. Me, I do a lot of affordable lending. I deal a lot with first-time home buyer, which I absolutely love because I love to educate them and empower them. So I'm kind of waiting to see, how that looks.
Do you like these changes? Do you like changes do you like these type of changes? Do you embrace them? Like, what do you feel about them? How do you feel
I do.
about them?
I do. Anything that benefits a buyer,
Perfect. Great.
especially
Yeah.
that individual that's a first-time home buyer, that can make those little changes, like the 30
Yeah.
basis points for
Yeah.
FHA, that's going to help someone that might not have qualified before. Now they could afford a home, right? So yes, the loan
Right.
level price adjustments, it takes me a little bit longer to understand like this, it's a little complicated, like, as I'm explaining it to you, because I can't really conceptualize it till I see it in the system.
Yeah, for sure.
Because it contradicts why the loan level price adjustments are there. Yeah. Hmm.
And it sounds like that borrower with the 750 credit score and a little bit more money, that the FHA may not even be the right product for them,
Oh, right,
correct?
right, right,
Yeah.
right. So that scenario I was giving you was for
Yeah.
conventional loans. For
Oh, okay.
conventional
Okay.
loans, yeah.
Okay.
So
Makes sense. Okay.
FHA, the better thing with FHA is the pricing
Exactly.
is set up that way. But on
Perfect. The
the conventional
conventional makes
side,
sense. Okay. Okay.
yeah,
Makes sense. Great.
yeah, hmm
Okay. So let's talk about really, obviously you're in the Chicago market. I'm in the
hmm
Chicago market. Let's talk about the Chicago market. What are we seeing right now? Are we in a healthy market? Are we in a stressful market? Like, are we in a good market, a bad market? Like, what are your, kind of give us your take on kind of where we stand right now?
Yeah. Well, I would say it's definitely changed, and I see the tides turning again, but it did change to a buyer's market out here, and the like. Let me go back to what are we now in February?
Yeah.
So like November, December, I had
Yeah.
buyers. That's when it really was changing into a buyer's
Yeah.
market. But I had buyers that would get a home inspection and literally say, "Nope, I don't want to deal with this house. Let's
Wow.
go look for another one." Whereas in the past, you would have never heard that, right? Like
Yeah.
you mentioned earlier, you're like,
Yeah.
we're gonna just cancel this whole deal. Like, we don't want to do anything with this. Or not cancel the whole deal, but we won't even get the home inspection. We'll just buy the house as is, right?
Yeah.
Back
Yeah.
back in the day when it was a seller's market. Um, Now though, I do see, even though I think even though that rates aren't as low, um, it's still a great time to buy. And
Hmm.
I am in January, again, still a buyer's market. We have sellers that are really negotiating now. They're dropping their prices. They're giving what they call sellers concessions, which is
Yeah.
where the seller will give, closing cost credits towards the buyer's closing costs. I think for the number of loans that I closed in January, there was about $51,000
Wow.
in sellers concessions that were given. So that's a lot of money. You would have never seen that, you
Yeah.
know, during the seller's market. However, now I see where it's going to start changing more into a seller's market if we don't, some of these buyers don't get moving, because what's going to happen is you have buyers that are out there. The inventory is still a little bit low, but you're going to have more buyers come spring market thinking, oh, it's going to, be better, and, things are going to be back to normal, where you're going to have these buyers that were waiting, and then,
Yeah.
the ones that are existing, and then the inventory is not there. I have a feeling it's going to turn into a little bit of a seller's market again.
Do you feel that there's an interest rate that would make that flip?
Um, so what's interesting to me is I think the only reason people ever got like this, I want to wait till the interest rates,
Yeah.
go lower, is really because of, they got to see this little window of rates dropping so much. Because what happens is in our mortgage business, when the rates go up, I don't really care.
Yeah.
And
For
that never
sure.
bothers me, because in the mortgage business, we will always have other products that come out to
Yeah.
help that current landscape. So, for example, right now we have a lot of 2-1 buy downs, the
Yep.
buy down. So the rate might stay, the note rate might be 7, but we can get it to start out at 5 and then 6 and then 7. That product has been around since I, was in the business. So it's been around for a
Yeah.
long time. So we will always release products to help the current environment. So maybe at ARMs, maybe adjustable rates
Yeah.
weren't as, when the rates are so low, you're not going to see adjustable rates being offered as much because it's not a popular product. Whereas now, rates start going up, and that's going to, obviously maybe the demand for an ARM will be greater. So therefore the pricing gets better for them.
And the
So
2-1 buy down, can you explain what that is?
yeah. So what it is the seller will pay, they're literally buying down the interest rate to start
Okay.
out either 3% the note rate or 2 below the note
Wow.
rate. So they're
Wow.
they're paying the difference of what the payments would be on a monthly basis, and that
Interesting.
money is being charged to the seller, and then it's actually held in escrow by the bank or the lender who you're making your
Hmm.
payments to. And here's a really good caveat that I just learned about is that if they ever were to refinance that home, that money that is sitting there, they'll actually get a refund of that money. So,
Wow.
yeah. So it allows them to start. So, for example, if the note rate was, like I said, 7%, it allows them to start out when it's called a 2-1 buy down. That means it's going to start two below the note rate.
Yep.
If
And
it's
then
a
it goes
three
to,
one buy down, it's three below the note rate.
makes
Okay.
sense. Okay,
Yep.
great.
So then if it's 7, then it'll be, 5. And the difference
Yeah,
between the 5-year note rate, right? Or the 5% and the 7%, that's the difference of what the cost is. So that's what
makes sense.
the whole charge is. So it's not cheap, right? It's not cheap. So it may be $12,000, and that's what the seller puts out for the client. In, the buyer can't pay for it. In the guidelines, the buyer can't pay for it.
Makes sense.
So yeah, so they may not
So
get
that,
the right,
yeah.
yeah, they may
So
not
there's
get the
just a lot of,
protection,
yeah, there's
but
a lot of opportunity from saying, hey, we want a concession versus our closing cost, or
yes,
we want a 2-1 or 3-1
buy
buy
down.
down. So
Yep.
again, like there's just a lot of negotiation that, as an agent, that we can obviously, to get our client into the best, scenario and situation. So when you do a 2-1 buy down, that two is for the next year, for the next 12 months, and then that
Yes,
one
so
is
it
the
would be
following.
7. So again, let's use the scenario of
Okay.
7%, right? That's the
Okay,
note
great.
rate. In other words, that's
Yep.
the rate it's going to land at.
Yep.
So it's 5, the first year will be 5
Okay.
percent. So
Okay.
it is for the whole entire year, and then
Okay.
6% that next year, and
Great.
then 7% and the life of the loan. Hmm.
Perfect.
Yep.
So then
Yep.
so they'll stop at 7.
Yes. Yeah. Because that's
Okay.
the note rate. That's the
That's the
actual
no
note
rate.
rate. Hmm.
Perfect. Okay,
Yep.
great. Awesome.
Hmm.
Perfect.
Yeah.
Awesome. Makes sense. Great. Awesome. Well, let's talk about, really, um, really the process, like what are, you talked about earlier, kind of the rule of two. Can you
Mhm.
explain that as far
Yeah.
as, if I want to buy a home, what do I need to do? What does that look like? How simple is it to buy a home today?
Well, first of all, I want to say it's simple when you're working with the right team. Okay.
Exactly. Yeah.
Because I get a lot of comments from clients who are like, wow, this went really fast. This was like really easy. And like it was, but it's only because you were working with the right team. Because I'm sure
Yeah.
you've heard of stories out there that,
Oh
didn't
yeah.
go so well.
Horrible.
Right. So that's my first, you want to make sure you get a professional realtor such as yourself and a, really good seasoned loan officer that knows the guidelines and knows, their products, such as me.
Great.
But
Awesome.
I always like to let people know, look, we're going to look at as a lender, we're always going to look at the last 24 months or the last 2
Great.
years, right? So that's where I say rule of two. We're going to look at the 2 years of where you've lived. So what was your home address for 2 years? We're going to look at the 2 years of where you have worked, right? Again, doesn't mean it's the same job for 2 years, but that's the window of what we're going to look at is 2 years.
Exactly.
And so, there's a lot of, college students, right, graduating.
Yeah.
And so sometimes they think that they can't buy because they just became a nurse and they were in school. Well, guess what? You can, because we look at the 2 years, but that means if you were in college or like at a trade school and now you're working in that trade or in your profession, we're going to use that as if you were working. So we don't
Great.
count it against you. We count it, for you. So 2
When you
years.
look at the 2 years of income, obviously we just got out of COVID. So
Yeah.
how do you look at someone that maybe had unemployment benefits for the
Yeah.
last year?
Yeah. So we use unemployment only when you're
Okay.
a seasoned, individual that has been getting unemployment for 2 years. See, there's
Okay.
that 2-year rule.
Oh, wow.
So like a landscaper, right?
Yeah.
Or maybe a construction worker.
Great.
But I will
Like a
say
union worker, it's
union
like kind of
workers.
seasonal, kind of,
Yeah. Yep.
they have maybe like a couple months here, then they're
Yep.
working. Okay.
Yep. Or
Okay.
like work in the Midwest. I mean, we get a
Yeah.
thing called, we get something called snow,
Yeah.
right?
Yeah.
And
Yeah.
so, it doesn't always mean that they can work on the pavement or they can work on
Right.
the
Makes sense.
yards.
Okay.
So, yeah,
Perfect.
so those are the things that but they have to have earned unemployment for 2 years in a row. Because what ends up happening is sometimes they'll get it 1 year and then they don't get it the next year. And guess what? I can't
Interesting.
use it because,
Yeah.
so yeah, so that's something that's really important. And then we look at, your 2 months worth of
Okay.
bank statements. So again, there's
Okay.
that too. So we're going to look at the last 2 months for at least FHA conventional. Sometimes it's just 1 month that we look at for conventional. So, but FHA does require 2 months. Yeah, so those are the kind of things, and especially
Right.
for like even somebody that's self-employed.
Mm-hmm.
Again, we're going to look at 2 years of tax returns
Great.
for especially FHA because we're going to average out their income. Sometimes in conventional, we could use 1 year. And there's a misconception out there that of people that says, "Hey, I decided. Let's say I was I don't know, working for a company and they decided, they were W-2'd and they decided they wanted to do the same job, but they went and started their own job, like their own company. So
Mm-hmm.
they become self-employed. If they're still in the same profession, but they decide to
Right.
go, we can still qualify them. So
Right.
that's kind of a cool thing because people think that they can't, that they have to have 2 years as long as they're in the same line of work. Yeah, I always try to make that happen because
Perfect.
it's the same profession. And that's
Awesome.
with conventional.
Great.
Yep.
Awesome. Perfect. So as far as just really products that you offer,
Mhm.
what does your client look like? What is, really what does that client look like to you as far as, just kind of your I wouldn't say your bread and butter. Obviously you work with many different clients,
Mhm.
but what
Mhm.
do you see your typical client looking like, or your kind of your persona of client?
Yeah. It's a very interesting question because as you're asking me, I'm like, in my mind looking at each
Yeah.
of my clients. And I have
Yeah.
clients that, they're
Great.
in their 60s and they're buying their first
Perfect.
house. I
Great.
have clients as young as, I just did a mortgage for a young man who is 20 years old. I'm super proud of
Wow.
him. And he bought his first 2 unit,
Oh,
you know?
wow. Yeah.
Yeah. So, and I told him, look, you set this up right. And,
Yeah.
live there and then you pay the other, it pays for itself. And, that's one of the things, income generation, right? We always talk about
Yeah.
this passive incomes, thing. And, he'll be able to do that, if he pays it off sooner, but it'll pay for itself, right? The
Yeah.
property. So I have, young couples, I have,
Great.
veterans. So I would say probably more of that first time home buyer is the
Great.
profile of my clientele, which is fine with me because I love working with first time home
Yeah.
buyers. I really, really, really do.
Absolutely.
Yeah. Because
Perfect.
there's a lot of things that go with it,
Yeah.
right? It's just not, oh, here's your house, kids. There's
Exactly.
education. They have questions. I tell
Right.
them, look, call me and text me whatever time, I work 7 days a week, evenings and weekends, and I'm available to you.
Great.
'Cause especially when you're out looking for that house, you're gonna have a lot of
Yeah.
questions, and I want you to know that I'm going to be there for you. And so I think by reassuring people and making them feel more comfortable, because buying a house, I used to, when I
Yeah.
trained my loan officers, next to divorce and death, I mean, buying a house is the next stressful thing.
It's pretty
And the more,
stressful.
yep. And so the more that we can help people ease that stress and know and hold their hand, I've got the patience for that. I can't say
Great.
that every loan officer does, but I've always had the patience for that.
Perfect.
Yeah.
Well, you're obviously very passionate about what you do, and that's so awesome that you are. Is there maybe one client that kind of sticks out to you over your time as being in the mortgage industry that you'll never ever forget?
Oh my gosh, I have so many of them. Seriously. It's just it always makes me happy. Like if they're crying, I'm crying with them.
Yeah.
Yeah, because I'm just first and foremost, and I mean this sincerely, I am honored to be part of that journey with them because
Great.
again,
I
this
love it.
is eh, next to like having a baby or whatever, like,
Yeah. It's a
you're there,
big
you're right
decision.
there. Yeah. And
It's a big
sometimes,
step.
sometimes I never even get to meet our clients now.
Wow.
The industry has changed. If I can go into this a little bit, um,
Yeah,
from when I
absolutely.
started in the business, I always like to tell people that I was in the business when these things called cell phones, right?
Yeah.
Came like we didn't even have phones like this. Like they were brick phones. They were like those
Yeah.
bag phones.
Yeah. Yeah.
So and your bill when you got it from like Cellular One, it was like $1,000. So not everybody had a phone.
Yeah.
We had beepers. So back then you had to order your credit report and you had this big old printer and like back in the like where the copy machines are and you just hear all these credit reports like getting printed out and you had to go and look through all of them to find out which one was yours and for your client. And then you also had to have everybody sign. You had to meet
Hmm.
face to face all the time. And nowadays with technology, I only talk to I talk to the majority of my people, because again, being Spanish speaking, I always want to make sure I'm talking with them. But, I know some loan officers, all they do is loan applications taken over the phone or over the application online, and they go
Yeah.
to closing, so it frees up. It's funny because when people tell me they don't really have, oh my gosh, I do always wish I had more time on my hands,
Yeah.
because me, I'm always working. But
Yeah.
I always tell some of these people, like, back in the day, you had to meet with people, you had to make time, you had to make copies, you had to, like, this is like a walk in the park right now.
Yeah.
Like, complaining. But sometimes the sad part for me is sometimes I don't get to meet my clients, because I'll do everything over the phone. We'll send them everything electronically. They'll send me documents over my phone or email or in the portal, and then they go to closing, and that's the first time I get to see them if I go to the closing, if I
Yeah.
have the time to go, or when I see the pictures that the agents post, congratulating their client.
Yeah.
But yeah. So that's one of the things that I think I miss a
Yeah.
little bit is, not meeting my clients all the time face to face.
Yeah, I know. I purchased a home, my first home in '99, and I remember like faxing stuff over and saying, "Was
Yeah,
it clear? Did you
yeah,
get my signature? Oh, your signature was cut off. Can you refax
I
it?
know, right?
Can you refax it?" And then I'm like, "Hey, you know what? Like, I got to go back to work. I was doing it on my lunch break. You're gonna have to wait." And my officer's like, I wanted to get this done. So
Yeah,
again, like you said, it's just a walk in the park. Like we have
yeah,
access to so much technology to scan it with your phone, take a picture, and
yeah,
then again, worst case scenario, like, hey, I'm coming to get the document. Like, I'm
yes.
going to meet you. I'm
I've
going to
done
go
that. I
get
still
it.
do that now. I
Yeah.
do that now. I think about when you're talking about, like, for us, it's easier, right? Like, as we're talking,
Yeah.
but I'm also thinking about for realtors, man, because when I
Yeah.
got into business, you guys had some really thick phone books, if you remember what phone
Yeah.
books are, right?
Yeah.
And people just had to page through what they call the
Yeah.
MLS today, and they just had to
Exactly.
look at the house, and you saw a little house that was black and white
Crazy.
picture, and now you get, you have all these other,
Yeah.
like, online portals, or like Redfin,
Yeah.
so all of them that you go and you can look at all these houses. But yeah, so it's a lot easier today to buy a home than it
Perfect.
was before.
Awesome.
As far as what it took, right, stepwise. Yeah.
Well, cool. So we're gonna kind of start wrapping up here. But one
Okay.
of the things as well is obviously you're very busy. You work very hard. What does Irma do for fun? Like
Yeah.
do you have any hobbies? Like what do you do
Um,
for fun?
Well, I like to work out. I do like
Okay.
to work out, and spend time with my dog, and take her
Okay,
for good
great.
walks. Spending time with my family and my friends is very important to me.
Great.
I have a good group of close friends, and my family is, now that my kids are older, because I just became an empty nester not too long ago. So
Okay.
I'm still, honestly, I'm trying to, like, recalibrate and rebalance
Yeah.
myself, because before it was my kids. I'd always
Yeah,
have to
yeah.
think about them, and I love that, right? So I had to like, I don't even really cook dinner for myself anymore.
Yeah.
But if they come home, or my oldest, who comes to visit, in between, his, whatever they call them, blocks, um,
Okay.
in medical school, I'll cook. Like, it's like
Yeah.
it re-energizes me. So I kind of know that I miss a few things about that. But yeah, and just, I like listening to podcasts. I like,
Great.
listening to audible books. I
Yeah.
like to read. I just,
Great.
it's really, trying to find myself again in
Yeah.
the thermal like doing. And I do love working. I don't see it as work. And I
Great.
think, I know some people I don't know why it bothers other people. I have no idea. But for me, I enjoy talking to people. I enjoy, like,
Great.
having great conversation. You're an awesome person. I love, our
Awesome. Thank you.
conversations. And so, yeah, so spending time with people.
I think that's great. I think, like you said, like, there's not, tell me about how do you balance, like, this is your life. This is what you
Yeah,
do. You truly enjoy it.
I do.
Like you said, you're an empty nester. So being able to, like, say, hey, I don't want to do this today, or I don't want
Mhm.
to do this the next hour, or be able to set your own limits, or your own, like, you really truly have control. And that's awesome.
Yeah.
That again, and like you said, like, but again, like, I don't feel that I need to. I feel, I've gotten the same way where, again, I don't take vacations. I feel
Mhm.
like when you take a vacation, you're trying to get away from something. I
Mhm.
love my life. I love, So when we travel, we just go. It's not necessarily just to it's not to get away, because again, like we've definitely put ourselves in a position where we don't get away anymore. We're not. When I was in corporate America, like I had PTO time, I found myself going on vacation and then thinking about the whole time on my vacation going back to work.
I know, and the
So
anxiety
again,
that comes with that, right?
it was
Yeah,
horrible. So
yeah,
yeah, so again, like I agree with you. Like when you do something that you truly love to do,
yeah.
and you
Hmm.
truly see the impact that you're making on people, like
Hmm.
you're like, I want to do it again, and I want to do it again, and I
Yeah.
want to help someone else. Like, who can I help again? Like, I want to
Mhm.
help and again, like you said, like you're very passionate about your Latino community.
Mhm.
And again, obviously, you're in the Pilsen office, and so again, like we have a lot of opportunity. We have a lot of work to do.
Mhm.
And like you said, this is your duty. This is what you do. You love to educate people. You love to share your story, and that's what I wanted to do today. Is I wanted to really just share your story. Again, like obviously, you're a mortgage guru, but you're not just a mortgage guru. You know what I mean? Like, you had to balance life. You had to, your life, got turned upside down, and you had to, your back was against the wall. You had to figure things out. You had to take care of these boys. You had to overcome these obstacles and these challenges. And again, there's probably a whole lot more to the story, but again, like you had obstacles,
Yeah.
and you had challenges, and but again, like you said, like I found something that I truly love to do.
Mhm.
My purpose is to help people.
Mhm.
And again, I think that you're also getting in a space where, how can I help not only my clients, but how can I help other people in my profession win? So realtors, insurance agents, but then like
Mhm.
you're saying, be a mentor
Yeah.
to a young lady out there who sees you, and sees what you've been able to do. Maybe a
Mhm.
young mother who's
Mhm.
like, gosh, like I want to give up, like I can't do this by myself.
Yeah.
I'm so tired. Like, again, like I can't win. I'm living paycheck to paycheck.
Oh,
And to
that's
be able
hard.
to like,
Yeah.
yeah,
I
yeah, to
just
be
my
able to
heart
pick someone up.
Yeah, my heart is really out there for the single moms, that's
Yeah,
and this is a great profession. I mean, I'm gonna be straight up. Like this allowed me to support my kids, put them through Christian,
yeah,
education and get them through college. And like I said, I don't think this profession as a loan officer is talked about enough
yeah,
as a profession. It's kind of almost like a best kept secret. And I don't know. That's one of the things that it's not easy, but as long as you put the time in and you're patient, because it is
yeah,
100% commission,
yeah.
as long as you put that time in, then
But I
everything
think
else.
when you have a mentor, when you have someone
Mhm.
who, is willing to put, like you said, what, here's the deal. If you have a trainer, it's like you obviously work out, your trainer is going to put as much in as you're going to put in. Do you know what I
Yep.
mean? So if
Yep.
you're showing up, they're going to encourage you. They're going to motivate you. They're going to inspire you. They're going
Mhm.
to, when you want to turn around and quit, they're going to pull you back in.
Yep.
And again, having a mentor, just, I feel like also just, I know for me, just holding each other accountable. We have to hold each other accountable, especially when we're in a client facing industry the way that we are. And,
Mhm.
again, like, having conversations like this, is great. And again, like we attended an event, in Pilsen last
Mhm.
week talking
Yep.
about change. We talk about, just again, like young women, young men, women out there just struggling as far as like, they see all this fast money YouTube and TikTok
Yeah,
and all of these things, and it's like,
worst thing.
gosh,
Mhm.
like let's connect you with some real hardworking, individuals, and
Yeah.
again, like teach you some skill sets that can transfer with them throughout their whole life, and they
Mhm.
can go win. Um, Perfect. Let's wrap this up. As far as just one last thing, like,
Yeah.
is there a quote? Is
Mhm.
there something that you live by that that we can wrap this up with, that that we can leave the people with?
Well, I think for me, just personally for myself,
Right.
I love Socrates. I went to
Okay.
law
Great.
school, and you've got the Socratic method, right, and of way of thinking. And one of the things that I've always lived my life by is number one, never be status quo, but number two, his quote of the unexamined life is not worth living.
Wow.
So, always think about I'm a solution oriented individual. I never see an obstacle or a challenge as something
Awesome. I
negative.
love it.
I always think about it as an opportunity to grow, right? There's no
Yeah.
failure. Failure is just something that you learn. You learned from that issue at hand. So for me, I've always wanted I always examine, my life. I always go back and I think about, like last year at the end of the year, okay, what did I do? What I learned?
Mhm.
You always have to learn from what took place. So then therefore it
Absolutely.
doesn't mean that, it doesn't mean it's going to help you in the going
Yeah,
forward, but at least you're acknowledging it, right? And so hopefully learning. And so yeah, that's my favorite quote of all time.
perfect. I love
Yeah.
it. It's so powerful because I think even being able to do that on a smaller level, like last week, yesterday, do you know what I mean? Like, how
Hmm.
can I be better today
Yes.
than yesterday? Because I feel like we let a week go by, we let 2 weeks go by, we let 3 weeks go by, we let a month go by, and now we've built such bad habits that now we kind of have to,
Go
kind of
back.
throw those bad habits
Yeah.
out.
Yeah.
So again,
Or
like if I can, yeah,
yeah, and even I was going to say, even on a month-to-month basis, I examine every file and go, okay, what could we have done
yeah,
differently on this file,
awesome. I love
or I
it.
notate like, okay, we did this twice this month. What
Yeah,
happened? Why did
right.
So it's you always have to examine, right, and look at it from a positive light, not something with a negative light on it. Yeah,
Perfect. Well,
yeah.
awesome. Thank you so much, Irma.
You.
Thank you so much for obviously taking the time, to really sit down with me. And again, I just look forward to really just sharing your story with everyone and,
Thank you.
just watching the feedback that we get. And again, I look forward to obviously, building a relationship with you and working very
Hmm.
closely with you.
Yeah,
As obviously I start this front facing journey that I am doing. But
yeah,
again, thank you so much for taking the time. And again, just gosh, amazing, amazing, amazing. I love it. And again, my name is Gabriel, the Realtor Montoya, and we had an opportunity to obviously sit down with Irma Deleon, the mortgage guru. I hope that you guys got some value out of this. I hope that you guys got just some amazing, amazing things. I'm also going to be, posting Irma's social media. How can they reach you, Irma? Can you give them an email address, please, or can you
yeah,
give them
yeah.
some information?
Yeah. Do you mind if I share my cell phone
No,
number?
no, go ahead. Yeah, please.
Yep. You can either call me or text me on my cell, and I am available 7 days a week. Evenings and weekends, it would be 312-282-1777. Again, 312-282-1777. And then I have my own website where you can look up, under irmadeleon.com.
Great.
And it will go straight to my website for mortgages. And, you can contact me through there as well.
Perfect.
Yeah.
Awesome. Thank you so
All
much,
right.
Irma.
Okay.
Awesome. Great job. I appreciate it. Have a good night.
Appreciate it. All right.
All
Enjoy.
right.
Bye.
Take care. Bye.